We also have Probal Sen, who is the energy analyst at ICICI Securities, joining us now to discuss the earnings fine print. Probal, you looked at the numbers, the oil to chemicals business, it has done well on a quarter-on-quarter and on a YOY basis. Yes, there is some weakness on the petchem side, but we know the raw material prices were higher. Going forward, what is the expectation, especially from the O2C segment, considering that we are in a strong macro environment as far as the energy prices are concerned?
Yeah, hi, thank you very much for inviting me. I think the OTC segment is obviously going to see a much stronger trajectory in FY23. If you look at just the Singapore benchmark trends at the end of the fourth quarter, where they were about $8 odd, they have actually been trending at comfortably more than $18 for the month of April. And if that kind of a trend actually continues with diesel and with the diesel spreads at well above $30 and gasoline spreads as well, well above $20, then whatever weakness we are actually seeing in the petrochemical segment, where integrated margins, as per our estimates, have obviously come off to about $530 to $540 a ton for Q4. Even there has been some recovery, given that, spot LNG prices have once again started to come off and are at about $23, $24. So to that extent, I think the OTC segment, despite its very robust base that is already there now from this quarter, I think one would probably expect even stronger numbers coming through for FY23.
Okay, stronger numbers for the O2C segment. But Probal, one segment, that's the oil and gas segment, we have not spoken about it in a long time, but now it has started to show results. We do have more production coming in from the 3 clusters in the KG Basin line. What is the outlook on this one? Because from now on, the impact of higher gas prices also start trickling in. Is this a segment which will start meaningfully contributing to overall earnings?
Yes, absolutely. I think it has not been part of even the conversation around Reliance from basically about FY17 through to 21, if you really look at it. So FY22 is when it has actually made a good comeback, and FY23, where, their peak production is likely to be hit somewhere by the end of the year at about maybe 25 to 30 MMSCMD, whatever they manage to reach. And that, as you mentioned, combines with, the high premium gas price probably touching about, $12, $14 by the end of the year. So obviously, I think the revenue as well as the profitability of that segment will become meaningful. Now, obviously, given the size and scope of the business has gone, completely different, in the last couple of years for Reliance. So upstream may not still be a very significant proportion of the overall business, but on an absolute basis, it becomes a very, very profitable business after a fairly long period of time. And I think that should be very encouraging. So old energy businesses, I think, are making a comeback in FY23, despite all the transition and transformation that, has been the intended objective. So that's going to be the interesting bit.
Absolutely.
I think over the next couple of years.
In fact, in their press release, they do mention that the O2C business has contributed 52% of the incremental EBITDA in FY22. And it was a very strong year, FY22, for the oil to chemical business. The revenues have hit an all-time high in the oil to chemical business, crossing 5 lakh crores on the back of higher oil prices. The EBITDA has gone up almost 40% year on year and is now near the pre-COVID levels. This is particularly the oil to chemical business. It's a strong surge in fuel margins, higher utilization that has helped them offset the relatively weaker downstream product margins. So Prakash Diwan, come in on this. I mean, as Probal was also saying, now it's back to tracking the traditional business, which is also on a high growth trajectory. How much of this is priced into the stock, you think, and what kind of contribution do you see from the oil to chemical business going ahead?
So, Sonia, as I was saying, 5 quarters back, we didn't really discuss the oil and gas contribution at all, because there was none worthwhile in terms of relative strength. But for the last 2-3 months, ever since oil has been on the boil, very clearly this has made a comeback. And gas as a dependable revenue stream is so scalable. And you could recall that when the company started in last year, April to June quarter of FY22, when they started the exploration from some of the clusters, and they met with a success which was predated, in the sense which was much earlier than scheduled. There was this hope that this would probably be scalable, and that's exactly what's happened. So the recent change in the stock's outlook is being contributed by this comeback from traditional oil business, and of course, the hydrogen business investments in which are galloping with every day passing by. There's more and more stuff that you see. What could probably create a backbone is the oil to chemical business, whereas the retail business is something which I believe will surprise us going forward in the next 3 quarters, maybe with a lag of a couple of quarters. But the next 3-4 quarters belong to retail, belong to Geo in terms of the scalable nature of the business. So you have a strong backbone, and you have the optionality of these retail and Geo businesses contributing, which are significant potential value unlocking opportunities as well. So let's wait for that. But I think the stock is going to get re-rated with the oil to chemical business being such a strong backbone after a long time.
All right, and I was looking at some more details from the retail business itself, where they said that it's exactly what we were discussing, that it's delivered its best ever quarterly revenues, even surpassing the festive quarter performance despite the challenges posed by the spread of Omicron wave and coming out of the festive quarter. Headwinds posed by the COVID situation in January were actually offset by robust growth that they saw in February and March, and they added almost 800 stores, 793 stores and 3.1 million square feet of warehousing as well as fulfillment space during the quarter itself. And for this year, Prakash, they've added almost 2,500 stores. The business more than doubled their daily orders year on year across all the digital commerce platform. And then we've seen them, make a lot of these partnerships as well. There was Abu Jani, Sandeep Khosla. They formed it with Abraham and Thakur. There was Rahul Mishra, the fact that they went ahead and bought Clovia as well. So a lot of brands being added, a lot of platforms being added, a lot of new verticals being added. What does this tree look like once it fully blooms?
No, so that's what I'm saying. Right now you don't see it's end of the day, it's a banyan tree. It's not bamboo that you are seeing grow, right? And what happens is, as it spreads its wings and then starts kind of getting into that stage of maturing, each of these portfolio components, Mangalam, are going to rightfully have enough headroom to scale up, right? So and I keep on mentioning this, that what they're doing to the country's retail outlook as retail environment or marketplace is something which is very unique. You go to the BKC Maker City complex and see what's at work out there, or you see the new facility that they've created on the hospitality side. So, very clearly there are new landmarks that are being created right now, the new milestones that are being invested into. All that sweating will happen over the next few years, and that's what people like to invest for, right? So from that angle, I think retail will probably be at least 2 times this revenue size very clearly in the next 18 to 24 months is my guess. It's a very aggressive growth that is possible, and that should deservingly come given the strong investments in that. So 2x of what you have can change the entire, till the balance for new age businesses, again, making a comeback along with Geo as compared to the O2C business.
Okay, and large strides being made as far as milestones for Reliance Industries. The company has crossed revenues of $100 billion. These are gross revenues as of FY22, so a big milestone there as well. Gentlemen, thanks a lot for joining us and help us analyze these numbers. If you've joined in late, Reliance Industries